Welcome to the Capital News. I am your host, Alex Karitis. Today is Tuesday, March 31st, 2020. Thank you so much for joining me. Officially, it is the end of the first quarter of 2020, and what a wild ride it has been. We had stated last year that this year was going to be one heck of a roller coaster ride. We had no anticipation, no idea that it was going to be this crazy, and we were only through the first quarter. Much more to come, believe me when I tell you. Title of today's podcast is Whatever It Takes. And this is basically the new lingo coming from the Federal Reserve. This is virtually verbatim the language that the ECB used recently. But the ECB had used this language under the leadership of the former president of the ECB, Mario Draghi, years ago. So these guys continue to kick the can further and further down the road. Whatever it takes. What does that even mean? All of this has a cost, right? So you have to ask yourself, at what cost? Whatever it takes. Just to stabilize the economy, because that's all they're slightly doing. They're not even doing a very good job at that. They're just kind of keeping the system afloat, a system that has brought us to our knees once again. And once again, we find ourselves with the same politicians, the same institutions, trying to prop up that very system. This is not a system worth saving. This is not a system worth salvaging. Not for a second, but that's what they're going to do, because these are the keepers of the system. These are the proponents of the system. So, of course, it is in their interest to keep this going for themselves, for their special interests. Not for the average American, but who cares about them? You're going to get your $1,200, sit down and shut up. And if you're lucky, you might get an extra $600 a week on unemployment. You might make more being unemployed. So there's an incentive or disincentive, if you will, for that type of situation. And again, at what cost? Because clearly this is going to cost something. It's already in the trillions of dollars. How much more are they going to go? How is this going to be paid back? How long is it going to take to pay back? Do you understand the mathematics of this? Do you understand how many years of optimal growth would have to exist year in after year out to even break even on this? Because we have a national debt that is out of control, $23.5 trillion and counting very rapidly, because we just threw on top of it another $2.2 trillion that we do not have. The Federal Reserve, trillions of dollars. Trillions of dollars. And just like we stated yesterday, in the works, it's another stimulus. Phase 4, I guess they're going to call it. And that's going to get to infrastructure, and it looks like that's going to be another $2 trillion that we do not have. And we're going to talk about that. But first, I want to make a correction for yesterday, because yesterday I misspoke. I talked about Donald Trump giving authority to suspend the tariffs for 3 months on Chinese goods. That is not the case. This was actually brought up during this evening's daily COVID-19 press conference, where a reporter asked the president about this, and the president was quick to say it was fake news, blah, 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 blah. And they said, well, who are you with? Because this isn't true. Who are you with? And the reporter said, I'm with the Wall Street Journal. And Donald Trump, his body language just sort of shut down, because he was expecting it probably to be, New York Times, Washington Post, MSNBC, something like that. And the reporter was like, no, Wall Street Journal and Bloomberg are both reporting this, which is my sources. I'm very careful with who I go with, okay? This wasn't some leftyville trying to a gotcha question with Trump. So that's why I said this yesterday. And Trump was like, that's not true. I don't even know if that's being discussed. If it is, maybe it is, but nobody brought that to my attention. I make the final decision, and that has not been made. So I apologize, but I was going with what I thought were reputable sources, because, 9.5 out of 10 times they are. So I just wanted to state that for the record. But nevertheless, if that does come to pass, remember the same argument holds. Why would you do it if your argument from the president, from the administration, is you're raking in all this cash because the Chinese are paying us, which of course is not true. But I did want to state that correction for the record. So to the infrastructure bill, and I told you the $2.2 trillion was not going to be enough. And that was just signed the other day. And here we have another $2 trillion package waiting in the wings, pretty much ready to go. Now, even the president, during the press conference this evening, said, well, we've wanted to do this for a long time. The Republicans had a bill, maybe about 750, 800 billion. The Democrats a little bit more, closer to 1 trillion. But you know what? I want to do $2 trillion worth of spending on infrastructure because the interest rates are so low. We're near zero. Well, that depends on what side of the curve you're on. Okay, I mean, we're at, what are we on the 30? 1%, a little above 1%, 1.25, 1.3, something like that. If you really want to go out there, right? Because you're not going to continuously roll this over on shorter term paper, which is zero. And of course, we went negative, remember, on the very short term paper, those 1 and 3 month bills, which of course is a travesty unto itself, but I digress. So $2 trillion that we do not have to go after infrastructure spending. We just did a podcast the other day where we talked about the American Society of Civil Engineers. Their most recent report card back in 2017, they do a 4-year report card on the health and the state of American infrastructure, and they ranked it a D+. And on their website, the American Society of Civil Engineers, ASCE, you can find a breakdown per sector. And we went through that here and gave those individual grades. It was for air, sea, ports, rail, waste, whatever it was, we gave you shot by shot, grade by grade. Overall, it comes out, again, to a D+ grade. It's not good. We're supposed to be a first world country. Infrastructure has been lacking at every level, federal, state, and local. Many of you are aware of this personally, of course. Pothole after pothole, failed system after failed system. It's a travesty. So the sad thing is, it's needed. The problem is we don't have the money. And using low interest rates as justification, especially during this time, is not really the best rationalization. But you know what? It's needed. But you have to understand something. This in and of itself is not going to be any type of stimulus either, because you have to look at infrastructure spending as an investment, meaning you're going to get paid back in the future. There's your stimulus. Your stimulus comes from the future. Not today. Yeah, you may get some people working, doing this, that, or the other, but to do that work, you got to slow things down. All right? You want to build a bridge, maybe you got to shut some roads down, you got to divert traffic, got to hold traffic up. It causes some problems, but you're hoping through a cost-benefit analysis situation that after a few years, you get paid back. Then you start reaping those dividends. That's the hope. That's the hope. Remember, we're hoping that the federal government, of all people, of all institutions, can figure this out. They don't have a pretty good track record, ladies and gentlemen, so don't hold your breath that this is going to be bringing in the big bucks 4, 5, 6, 7 years down the road. I hope it does, because it's needed. But that's where it comes from. It comes from hopefully creating the efficiencies of getting goods and services and people from point A to point B in a quicker, safer manner, which would hopefully bring you a quicker payback period so you can start reaping those dividends. $2 trillion. These numbers are staggering. On top of it, again, $2.2 trillion, an 800-page bill. We have no idea what's completely in there. You know there's waste. You know there's pork. And can you imagine the theft and the fraud that is going to ensue? And of course, we have that Inspector General, the Special Inspector General, who is going to be assigned to look at this. But, the White House, Donald Trump, no, we're not going to be looking into any of this. I'm going to put that money where I want it, and you can't see what I'm doing with it. So there's no accountability. It's our money. And now we're going to spend another $2 trillion for, I'm sure, bridges to nowhere again. Pork barrel spending. It's just a never-ending nightmare. It's a twilight zone. We just stated yesterday they're going to do this, and lo and behold, the very next day, today, on today's podcast, they're already talking about $2 trillion in infrastructure spending. So you can bet your you-know-what that they had this in the wings, just waiting. So I don't know what they think this is. It's the COVID-19, it's a crisis of a lifetime, so you can't let a crisis go to waste. So let's just spend a whole bunch of money in the trillions that we do not have. And everything's going to work out fine. And if we can't tax it because people aren't working, so there's no income to tax, they're not out there spending, so there's no consumption tax to get, then we'll just have the Federal Reserve print it. That's all. because that works. Ladies and gentlemen, we have had a printing press in this country for well over 100 years. Okay? This is not some sort of panacea. The light bulb didn't just go off. Oh, what have we been doing? Why have we been taxing? Why have we put limitations on our printing press? When all we had to do all of this time is just print money to infinity and it'll solve all of our problems. But that's not how it works, because it doesn't work that way. If $1,200 was such the secret sauce that's going to save everybody from economic ruin, then why not make it $5,000 a person or $10,000 a person? If you're going to print trillions out of nowhere just to keep the system afloat, again, why not those bigger numbers? Wouldn't $5,000 per individual go a lot further than $1,200? And don't be surprised if that happens, by the way. Maybe not so much, but another bailout package in and of itself for further payments of $1,200. Maybe they'll cut it down. Maybe they'll say, well, now this time $1,000 or $800. Just a little bit of something. A little bit of something to keep you going. And now you're starting to see people go on strike. Those people who are actually still working out there, a lot of people in grocery stores or delivery, Amazon workers are now going on strike. They want hazard pay. Because, they're working, they're in close quarters with people, they're making these deliveries to people who might have it in their house. Oh no, you got to pay me more. We're going on strike. So here we go. Some of this inflation is already starting to creep up. You're going to have me doing this work, you're going to pay me. And we just got to the end of the first quarter, so next month we're going to start seeing those first quarter earnings. They are going to be atrocious. Most companies are not even giving forward guidance. So what does that tell you? How bad it's going to be? They're not even going to give you guidance because they don't know how to model this. Nobody does, and I'm not blaming them for that, but I'm just saying that sends a signal right in front of you that they don't know how bad it's going to be, and they're just not even going to put a number on it. That's how bad it is. These BS artists aren't even going to try to BS you on this one. That tells you something. So stimulus after stimulus, what's the cost? You know the cost if you pay attention to this podcast. It's going to be inflation. It's going to be hyperinflation. It's going to be stagflation. That's what's going to come. How quickly, I don't know. But all I do know is the further they kick this can down the road with this stuff, the more money they print, the bigger the problem will become. There's just no question about it. And another thing that the Federal Reserve did today was they created, again, another facility in regards to the dollar swaps because of all of the liquidity shortages in U.S. dollar funding, because there's no international trade going on, so there's a whole bunch of shortages in dollars, a whole bunch of debt, U.S. dollar debt coming due, denominated debt coming due. So there's just no dollars in the system. But the Federal Reserve, despite the fact that they did this last week, opening up swap lines with various other central banks, they've opened up another one. They've opened up another one, and they're just going to allow these central banks to swap U.S. treasuries, and they'll get dollars. They'll just do a swap. Instead of selling the U.S. treasuries on the open market to get the dollars, they're just going to do a swap for them, because you know what would happen if they sold the treasuries. Price would go down, yields would go up. So who would again have to come to the quote-unquote rescue to keep those yields suppressed? The Federal Reserve says, we're not going to do that. We'll just do a swap with you guys. We'll just open up these swap lines, and we'll call it a day. This is ridiculous. There is no price discovery whatsoever. None whatsoever. This is manipulation to no end. We've gone through this. No pain, no gain, the moral hazard of it all, everything. I hope you're understanding this. Because since the Federal Reserve has come to the quote-unquote rescue and is now somewhat sanctioned by the federal government to purchase, not just on the secondary market, but primarily, directly from companies, corporations that they deem investment grade. Okay? These corporations are already issuing a huge amount of debt. Already. Government sanctions it, boom, there you go. So you want to talk about moral hazard, which we do here because we understand it. Well, there you have it, in action. Not in theory, not in economic theory, not in a classroom, in reality. The Federal Reserve says, we're going to buy directly from corporations that we deem to be investment grade. And lo and behold, these corporations, who I guess meet their criteria, are issuing records amount of debt. Because they have a buyer. they have a buyer, and they're going to keep those rates low. So this is just, again, kicking the can down the road, rolling it over and over and over again. And who's complicit in all of this garbage? S&P, Fitch, and Moody's, all of the ratings agencies, once again, completely complicit. Because you know, especially in this environment, a significant portion of these companies that are deemed quote-unquote investment grade aren't even close. Aren't even close. And who knows? Maybe the Federal Reserve has different guidelines to make the determination as to what's investment grade. Maybe they're not going by the credit rating agencies, but I'm sure they are. See the game that's being played here, ladies and gentlemen? And this isn't all companies, right? These are just the ones that are deemed investment grade. We already have a ton of companies that are rated junk. Companies that are close to default. Companies that are close to bankruptcy. So what does this mean? It means the federal government, in conjunction with the Federal Reserve, once again is in the markets picking winners and losers. They are saying, we like you because you're investment grade. Here's trillions and trillions of dollars. But you guys, you're junk. Into the trash heap you go. That's not how it's supposed to work. That's not how it's supposed to work at all. There's not supposed to be any bailouts. You're supposed to allow markets to clear. You're supposed to allow companies to go into bankruptcy, restructure. You're supposed to allow creditors to negotiate with their debtors and come to some sort of agreement. Instead, well, we're going to forgive you this, we're going to forgive you that. It doesn't do anybody any good if you're somebody who has maintained a healthy balance sheet. What's the purpose? Live that YOLO life. You only live once lifetime, right? That style. I should say that lifestyle. You only live once lifestyle. Who cares about that? Who cares about how much you rack up? Who cares if you can or cannot afford it? Go ahead and buy it. Go ahead and do it. You're going to be bailed out. This is ridiculous. Nobody is going to learn a damn thing from this. So long as these bailouts continue. And they're going to continue because we were just told by the Federal Reserve, whatever it takes. We have Donald Trump, who is using COVID-19, as is pretty much every other politician. They are using COVID-19 as an excuse to do whatever they want. And nobody's challenging it except, Representative Massey from Kentucky. And of course, he got attacked from all sides just because he wanted a recorded vote. God forbid. The biggest spending bill in U.S. history, God forbid, you have to actually put your name to it in the House of Representatives. And of course, 96-0 in the Senate. And that was the title of one of our podcasts, 96-0. No votes for America. I mean, this is picking up daily. There's another facility from the Federal Reserve. There's another BS stimulus package from the White House or Congress, if not both. Every single day. And nobody's asking how's this going to be paid for. Well, it's COVID-19. We got the money. It's low interest rates. We're printing money. It's trillions here. You're going to get $1,200. Sit down, shut up, stay home. We're just going to get away with everything. We are looting the treasury. What's left of it? And there's not much. We are looting the treasury, which means they're looting us. We're the treasury. It's our money. It's our money. Federal Reserve notes, they're printing them. They're their notes, but they come with interest. And we know what debt is here at the Capital News. These are the very same points that I highlighted and outlined and discussed, some in greater detail, of course, than others, in my recent letter to my congressmen and senators, Representation and Recourse. And I suggest that you check out that podcast because I read that letter, or go to our website, thecapitalnews.com, and read that letter again. Representation and Recourse. Sign your name to it. Send it to your congressmen and senators. Use it as a foundation to amend it to something that's more to your liking. Send it off. These people need to wake up. We need to wake up. This is a financial coup d'etat right in front of our eyes. And they're using a global pandemic as the excuse. Because they're going to say, nobody saw this coming. The economy was just the greatest ever, which it wasn't. But then, boom, the hidden enemy. We're at war. It's a plague. It's a pandemic. No, it's Superman. I mean, and now I guess it's just justification to do what they're doing. This is massive consolidation in the works. Massive consolidation. And guess where we talk about consolidation? You guessed it. Our book, The Cynic's Guide to Investing. In part 3, we highlight if there's one thing you're going to take away, or we hope that you take away in part 3 of this book, it's one word, and that word is consolidation. Well, here we are, ladies and gentlemen, 5 years after the book has been published, and we are going to see huge amounts of consolidation because we're going to see so many companies go out of business. They're going to go out of business. You're not even going to have to merge with them. They're just gone. They got no cash flow. They got nothing. There's going to be buyouts. There's going to be pure buyouts. Or they're just going to go by the wayside, and then that market share is going to have to be picked up by somebody else who's probably getting bailed out. And that's what you call consolidation. It's not free market capitalism. It's not a competitive marketplace in that sense. This is just never ending, and I hope you're starting to understand what's going on. I came across an interesting tweet. Many of you, I'm sure, are familiar with Airbnb. Basically, if you're traveling, you're going on vacation, if you don't want to stay at a hotel, maybe stay at somebody's condo or their vacation house or a cabin, wherever you're going, right? You want a more, organic feel of being in that town, and you don't want to be in a hotel, but you actually want to be in somebody's house. Well, people will rent out their homes. Well, I don't do a lot of that. I'm familiar with it. I have done it. But a lot of people love it, right? So it's a huge idea, big money maker, at least it was, predicated off of people vacationing and traveling and doing this type of stuff. And basically, it's sort of akin to the subprime crisis, and real estate never goes down, and of course, until it does. And of course, people always travel and vacation until there's a global pandemic, and then they don't. But a lot of people, this tweet highlighted, started businesses predicated off of Airbnb, and they bought properties for this very purpose. They would go to various destinations, obviously, where there's going to be high traffic, high volume, and they bought multiple properties. They don't own them outright. They're paying a mortgage on them, and they intend, obviously, to finance and pay that mortgage from people who are there traveling, vacationing, paying the rent. Well, now nobody is doing this. So how long can these businesses who have bought up multiple properties across the country, perhaps across the world, how much longer can they keep themselves afloat? Especially those who might have a dozen or more properties. Because we just talked about this yesterday. A lot of people do this type of stuff. They'll take the equity if they start building into one property, and then they say, okay, they get a loan and they go do it again with another property, and they rinse and repeat, and they keep playing the game. And it's fine to do if you can manage it, if you have the cash flow. As long as the music doesn't stop playing, you will have a chair. Well, guess what? The music stopped playing. So how much longer is this going to continue? We know during today's COVID-19 press conference that it's going to be another 30 days. So the president was aspirational with it being Easter. That's gone. Now it's going to be at least another 30 days. According to the most recent models that Dr. Fauci and others are working with, that they find to be the most reputable, we're looking at anywhere from about 100 to 200 plus thousand Americans who are going to die from COVID-19. Now, of course, that number can go down, but with the most recent data that we have, with the model that they are using right now, that's what it's looking at. Now, this is significantly lower than what would have transpired had we had done absolutely nothing and just said, okay, continue going to work, continue about your daily lives, continue sending the kids to school, don't worry about a thing. That could have been 1 to 2 million people. All right, at least this is what they're telling us, which is just horrific. 100,000, 200,000 is horrific. Okay, how many died in Vietnam? 60,000, right? The Korean War, I think, was almost the same, 50, 55,000. So this is going to take place, perhaps, over the course of a couple of months, the next few months. So this is significant. And this is just the deaths. This isn't also including all of those people who are filling our hospitals, who hopefully recover. But that's even a different statistic unto itself. So we are far from over. Even the president said it's going to be a very, very difficult 2 weeks. The next 2 weeks are going to be hell. And he's probably right. He's probably right with what's taking place. And we hope that, we can come up with therapies. We hope that we can come up with a vaccine sooner rather than later. But even that's going to be a year away in relation to the vaccines being created and, of course, properly tested for efficacy and safety. So that's still a process and far from being out of the woods. So how are the markets going to handle this? Again, I don't think the markets have truly captured the severity of what is facing us, what is coming down the pike. The president and the White House and some politicians and even some banks and, economists think that this is going to be a V-shaped recovery. It's going to be a huge drop-off followed by a huge bounce. It's just not going to happen, ladies and gentlemen. There is no pent-up demand. We go over it all of the time here so you understand this, so you can relay this information to your friends, to your family, because that's just the truth of the matter. It's just the truth. And the examples with the restaurants and going out to movies and concerts and all that. It's a one-off. That's it. You don't go, you don't get the sale. It's over. You'll get something else in the future eventually when everything opens back up, but that's not the case now. You lost it, you're not getting it back. And it's one industry after the next. It's going to be a completely different country. It's going to be a completely different global economy after this. It's going to take a long time. And we still have yet to see any major failures when it comes to bankruptcies, which are pretty much just waiting in the wings. But we know that the Federal Reserve, in conjunction with the federal government, are doing everything they can behind the scenes to manipulate these markets, to keep them propped up, and to bail out these corporations. You can continue to say that it's not their fault that this pandemic is here, which is correct. It's not their fault that this pandemic is here, but it is their fault that they squandered their resources. It is their fault that they squandered their easy money and their debt on share buybacks, that they didn't save for a rainy day. And you don't have to necessarily save for months or for years, but just, a month, a couple months of cash reserves, being able to tap the debt market, being able to perhaps issue shares, being able to cut your dividend or suspend your dividend. There's a whole host of things that these corporations can be doing to shore up their balance sheets. But no. Why do anything like that when you can just go to the taxpayer and say, hey, bail us out? Now, of course, they don't come to us. They come to the president. They go to our politicians who do not represent us, which is why the title of that letter is Representation and Recourse, because there is no representation, which basically means I have no recourse. What is my recourse? And I hope I receive a letter or a phone call or something from my congressmen and senators, and I will share that information with you. I would love to sit down with them. I would love to sit down with them and have a conversation. Of course, that's not going to happen anytime soon, I'm sure, in this situation with COVID-19 and all. I'm especially sure they don't want to sit down with me in particular to discuss those points one by one. And I have many others, just so you know. But again, use that letter as your own, sign off on it, amend it accordingly, and send it to your own. Please do. And again, as another thing, as a peaceful revolution that I'm calling for, is leave the Republican Party, leave the Democrat Party. Please. Please. Look into the Libertarian Party, look into the Constitutional Party, independent, unaffiliated. Just leave this quote-unquote two-party system because it's only one party. Are we going to spend $1 trillion or are we going to spend $2 trillion? That's the only difference between them. That's it. Is it going to be a little bit more foreign related, more towards the corporations, or is it going to be more towards the people, more domestic? That's all it is. It's the same party. It's only one, and I'm telling you to wake up. Wake up. Because there's no way there is any Republican or fiscal conservative who is actually fiscally conservative can justify this madness. Especially if you pay attention to this podcast, because I explain in detail the financing mechanism of all of this, how it's all to be paid for. So you can't justify it. If you like Donald Trump, you like the Republican Party, fine. But don't tell me you're a conservative. Don't tell me you're fiscally conservative, because you're not. You're not. Running roughshod over the Constitution, having us on lockdown, there's no oversight of all of this money, nothing. Don't tell me you're a conservative. Don't tell me you're fiscally conservative. Because there's no end in sight to this deficit, to this national debt, to the unfunded liabilities. Oh, and have you heard the newest one too? On top of all of this, and I think this is how they're going to bail out the states again, because in this most recent stimulus, there is a little bit of a bailout for the states. But I think it's going to take place in a infrastructure plan. But then I also think there's going to be a third. I don't even know how many numbers. It's almost impossible to keep track. But the states are going to need bailed out, which means the pension funds are going to need bailed out. And we talked about this yesterday in relation to looking at the tax receipts that are coming in to state governments and local governments. Well, nothing, right? If you're going to have people unemployed, they're not making any money, there's nothing to tax. Can't go out and spend. So if there's consumption tax, not going to happen. If they have a corporate tax, well, a lot of corporations are going out of business. So your tax revenue is just through the floor. It's completely collapsing. At a time when you have people reaching the retirement age, which means they're supposed to be paid not only Social Security, but people are supposed to be promised their pension. Well, they're underfunded. Well underfunded. And now the stock market just took a huge crash. And we haven't seen nothing yet, because we've yet to see these huge credit blow-ups, meaning the restructurings, the bankruptcies, all that jazz. We still have the price of oil continuing to collapse. Decade lows. Natural gas continues to go down. And of course, President Trump says, okay, we're going to talk with the Russians. Okay, we'll see what happens. We'll see what comes of that. I mean, again, I think you just might get some headline noise if you're lucky, and you'll get a bounce back in the price of oil, which I guess would be, in this case, better for the energy companies, but I think that'll be short-lived because of the supply-demand situation. It always comes back to that. We've seen huge supply shocks, geopolitical risks, tensions flaring between Iran and Saudi Arabia, between Iran and Iraq, between the United States and Iran. Yeah, you get your headline, you get your noise, you get your spike, and then boom, before you know it, you're right back at those lower prices. I don't think this time will be any different. So you might get a headline, you might get a spike, and then back down to earth you come. So it'll be short-lived. But the states are going to need bailed out. So again, your moral hazard for some of the states who may have actually run balanced budgets, who may have had a rainy day fund, who may have been prudent, who may actually have a decent balance sheet, what reward are they going to get? Now, if you had failure of these other states, what would be the reward to these prudent states would be they would attract more businesses into their state. They would attract more people into their states, which could theoretically allow them to lower their taxes even further if they wanted to, because they have more people. They have more businesses. So they got a larger tax pool, so they could actually lower tax rates if they wanted to, making it even more attractive for people and businesses to come to that state. Well, not anymore. Not anymore, because you're getting bailed out. So just stay put, stay where you are, we'll bail you out. Be reckless, spend money you don't have, make promises you can't keep. Don't worry about it. We got your back, Jack. And who's we? It's us. It's we the people. We're bailing ourselves out, folks. I mean, this is ridiculous. This is such stupid circular logic. Reach into your right pocket. Hey, Jack, here you go. And then you put it right back in your left. I mean, with interest. And it costs something. It costs something. But that's what we're doing. And we're led to believe that this is going to work. Who's in charge of the education system in this country? Oh, yeah, that's right, the government. Yeah. Coincidence, I'm sure. What else do we have? Oh, some of the market news. End of the month, again, some rebalancing, but all in the red. At the time of this podcast in the evening, futures markets, we have the Dow Jones, the S&P both down over 2%. The NASDAQ 100 is down 1.5%. The Nikkei, the Japanese market, is open and trading. They are down 600 points, a loss of 3%. Europe was pretty much in the green, up about 1% across the board. Australian markets are open, up 150 points, representing a gain of 3% for the day. Let's see what else we got here with the commodities. Again, WTI is at $20.46 a barrel. Brent is at $25.77 a barrel. Natural gas continues its decline. It is now at $1.65 per million British thermal units, continuing to get hammered. Gold is back below 1,600. It is at $1,585 an ounce. Silver is at $14 even per ounce. Again, I am still a strong believer that both of these metals, in conjunction with some other precious metals, are in a long-term bull market. Because if we're going to continue to have low interest rates, if we're going to continue to have money printing like it's going out of style, because it is, well, then you at least want to have some sort of hedge, some sort of diversification. That's how I play it. Again, I don't give investment advice here. You have to do your own homework and research and do what's right for you. But I try to give you information. I try to make an argument, and I will explain from time to time what I do or what I would do. And that's definitely something that I think is worth looking into. Again, having it physically, having it with some of the gold and silver mining stocks, some ETFs if you want. But, get involved with it because they're killing the currencies and they're killing them globally. It's a race to the bottom. On the bond front, we have the U.S. 10-year Treasury note yielding 0.63%. So again, somewhat of a flight to safety, or it's just the Federal Reserve buying them up to keep interest rates very, very low. So something's going to give sooner or later. I just don't think that these puppet masters are going to be able to put on a show for that much longer. Despite their efforts, and they are throwing everything in the kitchen sink and the kitchen sink and the kitchen sink at this problem, but it's a Frankenstein that they created. And of course you have, before I wrap this podcast up, of course you have the idiot, the former chairman or chairwoman, if you will, of the Federal Reserve, Janet Yellen. It's amazing. All these people, as soon as they're out or years after they're no longer in the Federal Reserve, they get religion. They see everything with it's just perfect 20/20 vision. Oh, yeah, we're going to have a problem here, she says, Janet Yellen. All these companies took on a massive amount of debt. It's just going to make it that much more difficult to grow out of this problem. Are you kidding me? And they're allowed to say it with no pushback. What are these journalists doing on these financial shows? Are you crazy? I mean, you got to keep a frying pan under the desk and whack these people over the head when they say something like this. Because it's needed and because it would make for fantastic television. How do they let them get away with this? She was there for all of this easy money. She encouraged it. That's exactly where this went to. And now she's, oh yeah, it's going to cause a problem. These people need to be locked up for crimes against humanity. I mean, because look what's happening. This isn't COVID-19. This is the economic policies that have been in place for over a decade, okay, with the pedal to the metal. And just when I thought, the pedal was to the metal, I mean, they're going to the ground now. It's on the street. I mean, they got this thing pressed. And if they can go further, they will. And I imagine that they will. No accountability. Their predictions were completely wrong, as they always are. Nobody gets fired. Nobody's held to account. Nobody's prosecuted or investigated. Nobody goes to jail. But you get to bail out everybody. But don't worry, you're going to get your $1,200. Sit down and shut up. Whatever it takes. Whatever it takes. Thank you so much for joining me today, ladies and gentlemen. It's been a pleasure having you. As always, please like, share, subscribe, get the word out, and leave your comments. We do love hearing from you. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Koritis. Godspeed.